Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Are markets getting spooked? Well, there doesn't seem to be much that can spook markets these days, but there are some scary signs of froth developing that could eventually become an issue. This past week had plenty to keep investors occupied with lots of big tech earnings reports, the Fed decision on interest rates, which they cut the Fed funds rate by 1/4 point as expected, in case you were wondering, and then, of course, the meeting between President Trump and Chinese President Xi on trade. Now, the stock market rallied strongly into all these news events, but then started to wobble a bit toward the end of the week. Now, market breadth has been terrible, which means there are a lot more stocks that have been falling than rising, despite the indexes reaching new highs, which happened on the back of just a few large tech companies. But it seems more likely than not that the market can stay relatively strong into the end of the year. However, we're starting to see some cracks in the façade, so probably not a bad time just to reassess your tolerance for risk. For this week's featured insight, markets are smart. So the markets are pretty smart most of the time. Now, occasionally there's an opportunity to take advantage of market mispricing, but you should usually start with the assumption that the market has more information than you do. Therefore, if the price of a stock is moving in a direction that doesn't make sense to you, it could be because the market knows something that you don't. Don't assume you're right and the market is wrong. This may lead to riding a losing position to much deeper losses. There's a reason there's a popular saying out there to cut your losses short and let your winners run. Looking ahead, November and December are usually strong. The last 2 months of the year tend to be very kind to investors, with November and December clocking in as 2 of the best months for stocks on average. And while this is certainly encouraging, averages can be misleading. There have been plenty of instances where stocks have fallen in the final 2 months of the year. 2018 comes to mind. The S&P fell roughly 20% into the Christmas holiday that year. Now, we'll continue to get a lot of corporate earnings reports in the coming weeks, and so far the earnings picture looks quite strong. The big question remains, however, how much of the good news is already priced into stocks? There have been a lot of strong reports in recent weeks that have actually been met with stock sell-offs. When the bar is already really high, it's a bit harder to jump over. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.